Nigeria, where the Senate in the country has now approved President Tinubu's plan for more than $21 billion worth of foreign borrowing, and this is to plug the shortfalls in the 2025 budget. The approved plan includes loans of 4 billion euros and 15 billion yen, a $25 million grant, as well as domestic borrowing through the government bonds. The money is earmarked for infrastructure, healthcare, education, security, and housing. For more on this, we joined on the line by Dennis O'Shea, Certified Financial Modeling and Valuation Analyst and Geo-Politics Content Creator. A very good afternoon to you. Welcome to Africa in Business.
Hello, Thami. Thank you for having me again.
So let's take a look at these loans. How much do we actually know about them? Do you have details perhaps on what the terms of these loans are, the interest rates, for example, the repayment period? If you could, in a nutshell, summarize what the terms are for us.
Okay, so situations like this in Africa are supposed to trigger a lot of concern because we've seen situations like this reoccurring over and over again, but also you must check the size of each economy. And in this situation, Nigeria has a major sizable economy to be able to accommodate this. But the issue that we're facing is not the accommodation. The issue is the repayment of those loans. And so, according to what we have here, they said the loans are long-term loans, some within the tenors ranging from 20 to 35 years. They're strictly tied to capital and human development projects. So looking at that, they're not shunted. The lowest that I can see in the different agreements is a 6-year long-term loan, which I believe the country over the period of that time should be able to handle. Though the amount looks quite striking, but it's something that the size of the economy can handle.
When you look at by the end of 2024, Nigeria's total public debt stock reached around 51.3% of GDP. Have the calculations been made as yet with this added, foreign borrowing, what that would then escalate to?
So there was a recent payment of loan that was made, if I'm very correct, it should be in May. Nigeria paid off IMF loans of $3.4 billion. Those were loans that came during the COVID pandemic period, and those were emergency loans that were paid off. The only thing remaining on that loan is the accrued interest, which the government have said is going to be paid off before the year runs out or into the next year. So that has been offset by itself. So that is already reducing the stress on the loan burden that is coming into the country. So, but also look at what these loans are going to be made for. They were outrightly put out that these loans are for servicing major infrastructural transformations. And if you've gone to major cities within Nigeria, especially within Lagos, Abuja, and Port Harcourt, you will notice that there are major infrastructural transformations that are already taken off on ground. That is already evident. Okay, so we give the President Tinubu that. Let's just give him that in the space of a few years to see will these loans go towards those infrastructural economical transformation projects. Yes, that's what we're waiting for. So beyond just the servicing, we're looking now at the transformation. Yeah.
So we have seen several African countries defaulting on the loans that they've made. But as you pointed out, just in the month of May, Nigeria did make a sizable, contribution towards their IMF loan. But if you look at the country's economy, it's quite vulnerable to currency fluctuations and also the oil price volatility. Might these factors in some way perhaps impact the debt servicing?
Yes, I agree 100%. So that is the major risk shock that this debt servicing are going to face. And I'm going to break down that down to you. When the price of oil a few years ago was super high, nations like Saudi Arabia had what they call the excess reserves that they invested in football clubs in Europe. They invested in airports, in Heathrow airports. The UAE has that sovereign wealth fund invested in those areas. So they diversified oil gains. That was where African countries that have oil, that's where they made a mistake. They were supposed to have foreign reserves that's supposed to be falling back on now. And in the case of Nigeria, sorry to say, we just spent those monies without thinking about the future where oil prices would be low. And we are in that future right now. The oil prices are not doing so well. So that's a major risk that Nigeria is going to face. And several other countries like Angola, too, are dependent on their oil reserves for borrowing, We have those yes. We also have a recent one with Aramco. Nigeria is trying to go into a loan deal with Aramco, Saudi Aramco, but it's not going through because the oil prices are not looking good. So that is still a pending transaction. So those are examples of situations that could be a major financial risk for Nigeria at the moment.
Dennis, as we round up this afternoon, you were quite deliberate in highlighting where and how this money was going to be spent. Infrastructure development being one of them. And we know that infrastructure development is one of the areas that is supposed to, if applied the way it should be applied, lead then to economic growth. What do you believe needs to be done differently this time round? Because it's loan after loan after loan. What needs to be done differently this time round to ensure that this $21 billion worth of loans actually leads to economic growth for Nigeria?
The truth is that we just need to tell ourselves the truth. Not only Nigerian, but African countries, the same story, different resources, different conditions, but the same story. You move from the SADC to West Africa, to the Sahel, the same story to North Africa, the same story. Egypt is having its own story also. So I'm going to say this. African leaders need to tell themselves the truth, sit with the economists, and sit with financial institutions, the central bank, and project realistically every quarter, every half of the year, every year, every quarter, every half of the year, every year, and monitor the overspending. There is too much overspending in government. Cut that down. If you can cut that down and you push a lot into education, into infrastructure development, into AI, into IT, into technology. Africa has the youngest population that is already a resource by itself. If you invest into that population in 2, 3, 4 years, you can see the explosion in success. So there is so much possibility, but the leaders must tell themselves the truth. And the stakeholders of finance, business, and economics within our African nations, especially in the nation of Nigeria, must be realistic to themselves. They must stop telling themselves the lies.
Dennis O'Shea, thank you very much for your insight as well as your analysis of the situation and where this $21 billion is going to go. So it's not really all about the money, but it's really about the structure. It's about the political will of actually being able to have a vision for your country and stick to that. We thank you for your time. Dennis O'Shea is a He's a certified financial modeling and valuation analyst and geopolitics content creator. He takes us to exactly 4:30 p.m. Central African time, standing by for your latest market indicators. Here is Buntle Hetbush.